Hey everyone, this is Kirk here again at OptionAlpha.com, and this is the members only video update for Wednesday, May 16th. So, what I want to do on this video is obviously just go over a little bit about what's happening in the market. I think we're starting to reach some really interesting inflection points here with the way that the market is finishing the day. And I think that's the key point here that I want to stress, at least in this particular video to you guys, is that this is different than what we've seen, I don't know, say about a month ago, where the market would dip in the morning, but then it would finish strong, right? And what we're seeing now is we're seeing the market that is starting to rally actually midday or morning, but finish very weak, right? It's starting to roll over in the afternoon. It seems like the afternoons are kind of the scary times where everyone wants to get out of positions because they don't know what's going to happen in Europe and Greece and whatever. So that I think is the key to where we're at right now with stocks. And I'm going to go over some charts that I think are pretty interesting, and we'll just go from there. So this is actually what you're looking at. This is actually my charts tab, which is different than the usual. I know, different than the usual profits tab you're used to looking to, but just follow me on this. This is actually the intraday of the E-mini futures. And what you can see on this is that you see these dotted lines here. These are actually the days. So this really represents a new day, new day, new day, right? Okay, so what we see here is that we see a lot of volume in the morning, and then we see a sell-off at the end of the day. And this has really happened for about the last 2 weeks or so. So you can see coming all the way back here to last week, we rallied during the day, we sold off before the close, right? The next day, we rallied during the day, sold off before the close. The next day, we opened big, rallied big, sold off before the close, right? The next day, again, we opened, sold off before, again, the whole way through, every single day, we have rallied into the afternoon and sold off before the close. This is not good for a healthy market, right? This definitely shows weakness. If we can't sustain a movement higher, then that's continued weakness. If we get to the actual profit charts, I know some of you are saying that this is probably good. You're used to these charts. What we see is we see some of the major indexes breaking down. And actually, Peter Brandt had a great article up on his site that I think you guys should check out. It's just a short little article and about talking about head and shoulders patterns. And he was actually the one kind of made me think, oh yeah, I guess there is a head and shoulders that just broke down. And so I want to highlight that at least on the Russell because it's the most clear on the Russell. But you can see here on the Russell that we've had the left shoulder put in here. We had the head, or the top of the pattern, put in here. And then we have the right shoulder that was just put in early May. And the most important thing here is that with these head and shoulders patterns, the more powerful they can be is if the right shoulder, i.e. this shoulder right here, is lower than the left shoulder, right? The head's going to be between them, but they're evenly spaced. The neckline is very well defined, right around 780. And you can see we've already broken that level here on the daily charts. This is actually a really classic, very good, strong head and shoulders pattern. You can see that back here when we had this one, it was a little bit more rough. We kind of had a double shoulder over here. But when this pattern broke back in May of last year, you can see that the measured move, which is usually from the neckline all the way up to the top of the head, that's your measured move on the way down. It almost extended that and then some. Really just the last day was kind of that last extension, that overextension before it snapped back. So it made the measured move, and in a pretty quick time period. Right now, the measured move would be somewhere around 700 on the Russell. Now, we have 780s that are going to roll off here in the next 2 days, so we're fine. And actually, the only real position we have for June is that one DIA 110 strike put, which is actually fine. It's more than safe below all these support levels. We're okay with that. But we just want to know where the move is likely to go, right? This is, again, just the measured move. It's not to say that we can't have, a pattern that has a false breakout and comes back up. Those have been known to happen. All these patterns don't work exactly, so don't bet on it working exactly like it should or it has in the past. But that's the measured move. That's where it could go if it did the full extent of the move. And we could see that happening with everything that's going on in Greece and Europe and whatever. That could definitely happen. So again, the only other major positions that we have, like I said, we have the SPX trade, which is going to be rolling off here in the next 2 days. So the SPX put trade. So all of our credit spreads for May are looking good. The only two ones that we had are rolling off. Any naked puts calls we had, those are all gone, obviously. The only other one we have is the DIA 110 strike put, which we entered and got really good pricing on. Quick fill. That's been really good too. It's only been a couple days since we entered that. So my plan is to keep adding to this portfolio for June. I still think it's going to be really profitable, even though it's 29 days. What are we at? 29 days, 28 days. I think it's going to be ridiculously profitable for us because the VIX is continuing to move higher, right? We've spent the last couple of months trading in this sub 20 range that now we've finally broken out of the 20s. It feels like premiums are really expanding across the board. So that's obviously great for us. That's obviously great for option sellers. And believe me, I know because I got sent an email from somebody else who was trading another service, and those guys were way too close to the market, and this tiny little VIX move blew up a trade into a, let's call it a double-digit loss return trade. So I know the complications. It's hard to wait for these trades to come up, but waiting during this time period allows us to have enough capital to really exploit the market right now. So again, we're going to be nimble. We're not going to pour in all of the money right now. It can obviously go higher. Let's just look back at what happened in August, September of last year when the VIX was north of 30 and into the 50s. So we're going to be careful, but we're also going to start deploying capital. So as always, be on the lookout for the next trading alert. Probably going to make it either here today or tomorrow, and then Facebook IPO on Friday. As always, happy trading.